one.
Many of you in the chat were skeptical that we could have a 4-day rally. Well, we did. And now we're working on a 5-day rally after a mixed bag of earnings. We'll see what the economic data has to say at 8:35, 8:30, and we'll see what Marc Chaikin has to say ahead of that at 8:15. It's Thursday, it's pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Okay, good morning, traders and investors. We've cleared yesterday's high. We're up 10.25 handles at 45.3450. That's in spite of the buck being up 43 cents at 103.52. Bonds in the green again, up 11.30 seconds at 121 and 19.30 seconds. Crude over 82, up 70 cents, 82.33. Gold taking a little breather, down 20 cents at 16.72.80. Silver back under 25, that's down 16 cents at 24.94. And Bitcoin holding those gains from a couple days ago. We're up $80. Well, we're just about flat here at 27,2040. So here we are with. Wow, what a mixed bag of earnings out there. We have some winners and we have some losers. Let's bring in Triple D. And what are you seeing out here this 8 a.m. morning?
Exactly that. Pretty mixed. Strength, again, the market's relentless bid does continue. Dip getting bought yesterday, the little dip that we had in the morning. Dip getting bought overnight. We were down earlier and we're starting to get bought up here again here. So the buy the dippers are in the full. We're going back to the highs mode, and you know who's to argue with them because that's exactly what seems to be happening.
Yeah. You had just tongue in cheek yesterday and mentioned about getting all those losses back for the month of August. I think
How
that's
far
going
are
to
we
be.
away now?
Well, we tacked on 15 handles yesterday, so now we're only about 70 handles
So
away.
too far. It's too far for
Now,
one day, but it's an impressive rally. What about the Qs?
let's take a look at the triple Qs, and we'll go to the monthly basis here just to take a look at last month's closing price in the triple Qs. I mean,
Too
that's been a
far.
little bit stronger, right? But hey, who knows? You get some bad numbers, right? We want bad numbers in this market. We ended last month. Wow, we're not too far off at 383.68. And as we trade right now, that's nothing. We're trading at 377.60. That's for the Qs on a monthly basis. The
PC
monthly,
comes in light, party time.
I think so. I think so. I
It's an
think
unbelievable like turn of events in 4 trading sessions. I'll just say that. The buy the dippers just win here once again. I mean, I guess who's to argue with them? Worked again here. Overnight, you're getting a lot of big moves here from a lot of earnings. I mean, we're out of earnings season, but we're not out of earnings season. Does earnings season ever end? Bring in Money Mitch here because we had a pile of companies reports last night. We got a lot of companies reporting here this morning and some fairly large names. I mean, you keep thinking, oh, yeah, we're 2 months into earnings season here. It's over. But is it over? Because CRM and CrowdStrike and Okta and Five Below, and then you got the typical dollar store disaster here today. I mean, wow. I mean, this is impressive that there's still this many big reports.
All right, let's get into some of those reports. Let's start talking here. Salesforce, let's go straight to it. Salesforce achieved impressive results. Q2 EPS of $2.12, beating the expected $1.90. Sales of $8.6 billion also surpassed estimates. Salesforce positive outlook for Q3 and fiscal year 24 is met with a surge in their stock.
It's a big pop. It's a good report. They said AI, according to let's go and just see how the official AI count here. Just grabbing it here from this morning. We had our official Nick Brown counting last night, 104
50 cents.
times,
104.
104 times on the call. Benioff knows the drill. He's all about, promotion of his stock. He's a very much stock promoter. So you knew he wouldn't fail the AI count. So 104 times what Nick Brown counted last night. That was between the call and in the Q&A as well. So they're saying what needs to be said. They're cutting costs. The report was good. It's a nice pop here for Salesforce. I don't know. I think you're running as a resistance probably up where you ran into it before around that 230 area, and you can clearly see it in the after hours chart as well, this struggle at 230, but nice pop for CRM.
Yeah, the initial surge went to 230, and that's also the area of a couple highs that you visited in July. So that's it's a good number. It's been there twice. We'll see if 3 times the charm. And there's some bidders out there. Anybody that sold it between 226 and 230, this seems like a mild bid here at 226. So there's an early range in CRM. Having a good morning.
Let's go to the next one here. We got Dollar General. Dollar General faces a slight setback in Q2 of reporting an EPS of $2.13, missing the estimate of $2.46. Sales of $9.8 billion also fell short. They lowered their full year 23 GAAP EPS guidance, and sales growth outlook looking really bad now. A significant change here of $7.10 to $8.30 versus a $10.01 estimate.
Wow.
Getting the dollar move, it seems like it.
Dollar Tree gets the disaster report. Dollar General goes down slightly on the report, and you think, well, maybe the bar is low enough that they can actually walk over the bar, but they couldn't. The report was an epic disaster here. You wonder if margins aren't getting squeezed. They're probably having trouble raising prices there, and obviously costs have gone up here for these things. So I mean, you got to think about margins getting squeezed here. Same store sales, basically the same, down 0.1% here, but the guidance is just like a big drop here. And that's the big thing. I'll just reiterate what Mitch was just saying. You got the, 710 to 830 analyst estimates were way up at $10. So, I mean, they're cutting their guidance down by 30% on the low end. So that is a significant drop in sales guidance there for 2023. Oh, that's for EPS. Sorry, that's for EPS. But I mean, this is a disaster. And last night, somebody was really convicted. I tell you, man, there was a nonstop seller last night ahead of this report. And with Dollar Tree getting hammered as much as it did, maybe somebody forgot to sell it and they wanted to get out last night, but they were offering iceberg style 156, 155, 154 and a half, offered all night for the entire 4-hour session. Would not get off the offer. Like you somebody lifted it for 5,000 shares, did not matter. They're like, we got more to go. Somebody really wanted out of this bad, and they were right. Stock down 15% here this morning.
Yeah, I mean, people aren't shopping at dollar stores. That's a little bit concerning, right? If
I
we're
think
looking
they are,
for,
Joel. The sales are still the same. The problem is, I do think, and sales growth is still supposed to be, right in there. Actually, if you look at the sales growth here, outlook 1.3 to 3.5 from 3.5 to 5. Same store sales about the same. So they're still shopping there. I think this is just a fact of margins getting squeezed. I think on the low end, you have certain companies that can just pass it through. And then I'm not sure on these dollar stores if they can, especially the ones that got like fixed pricing. Whether they went from $1 to $1.25 or whatever the hell
right?
they are, $1.50, but $5 below the same thing. I mean, everything's going to be $5. Well, if all your costs go up to like $3 or $4 or $4.50 on some of this stuff, your margins are getting squeezed. I gotta think that margins getting squeezed here with the rise in inflation. And yes, inflation's starting to get in check, but it doesn't mean that inflation's getting check. Prices are going down. It means they're just not going up as quickly. So I do think they're getting squeezed. Carmen's saying theft too might be an issue. I did not listen to the call in Dollar General. I don't know if it's even happened yet. Obviously reported here this morning, but I'd imagine that's an issue as well.
Also, if you look at it, if you're talking about margins and, your employees still want the money, right? They still want the,
Exactly.
yeah,
Labor
yeah,
costs. They're
labor
going to get
costs.
squeezed there too. So product costs, labor costs, all that. And then you operate a store that is supposed to have fixed pricing to the consumer. That's just not the recipe for success in an inflationary environment. And that's what we have been in for now 2 years. So I do think that's a lot to do with the fall from grace for these dollar stores. And I mean, it is an impressive fall from grace. Dollar General is now down 50% from the all-time high set back in October of last year. And then, and that's not even that long ago. I mean, like October last year, nothing, right? It's amazing that it was up at highs in October last year when everything was in the disaster mode. And then Dollar Tree, if we just look out to the monthlies here, it's not as far off the all-time high. We got up to 100. I'm just trying to grab 77, but 121. You're talking 33% off the highs. These things are down significantly from the highs. Maybe they got to start raising pricing. Maybe the Dollar Tree stores and Five Below and all these other companies that got fixed pricing to the consumers aren't going to be able to leave them fixed forever.
Yeah, there's they filed suit on this one. I guess the bad news is it's down over $24, but I guess the good news is it's off that pre-market low of 128.70. I can't really say, can't guarantee if that's going to be safe for now. If you're looking for a monthly low, if you're going back to COVID, you're going back to March of 2020, if 128.70 is not cheap enough for you, maybe I get a look at that March 220 low of 125. So, and then you're looking at the rebound high here. The rebound high has been right now, that last tick at 134.49.
Just want to give the numbers for Five Below there. Five Below with a Q2 EPS of 84 cents, slightly surpassing the estimate of 83 cents. Sales of 759 million also exceeded predictions. However, their outlook for Q3 EPS and full year EPS outlook falls slightly below estimates.
I'm thinking the same thing. Margin's getting squeezed here. That's just, it's logic. Sometimes it's just logic works, and it's logical to me. Again, not listening to the call, but I just assume when sales are staying the same and earnings are going way down, well, the math adds up to margins getting squeezed, because if the sales of your costs were all the same and the sales were all the same, you'd make the same amount of money. So if you're making less money, it's because your margins are getting squeezed. So I think same story here. Maybe they got to change to 10 below.
Filling the gap from June, you do have a buyer here at 168 as we speak. The initial surge after hours took it down to 168. They took it down there again. That doesn't have to do with the low of the move. The low of the move, though, is a little bit above that at 165.58. So if you twisted my arm, I would be a buyer. 165.5 to the 168 area. You are now looking at the rebound high as we speak. Believe it or not, you are $5 off that low at 173 and a quarter. That's been your rebound high off that low. But these are just now. This is nowhere near its COVID low, though. I don't want to talk about that. Neither do shareholders. The COVID low for this one is 47.53.
Let's go to UBS Group. UBS stunning with an impressive Q2. I have an EPS reported at $8.99. I got to check on that, but just wanted to talk about their sales, of course. Their sales coming in at $9.54 billion also beats the expectation. Notably, UBS unveiled plans to fully absorb Credit Suisse Swiss Bank, marking a significant strategic move here. UBS, pretty good lift.
Yeah, blows it away. I tried to short it into the report because it was bid up last night. That was a mistake because whoever was bidding it obviously was a lot more informed than I was. So getting dinged on this one.
Cutting costs, right? Cutting jobs. I don't whether this is just an artificial boost from getting those assets way under book value, right? From Credit Suisse, and then you cut a bunch of jobs. So, is it a one-time wonder? Well, we'll just have to wait to next quarter to find that out. A lot of trading's been done overseas in this. You're trading at the pre-market high of 26.68 just off that. Going back on the monthlies here, this UBS, I'm looking at 2015 here. Do we even have higher prices than this in UBS? Let me stretch out my monthly chart. But I'd focus.
European markets have been, if you go back to the financial crisis for sure, Joel, I would
Yeah,
assume,
okay.
like, again, it banks anywhere. Basically, like the Canadian banks have done okay over the course of the last 20 years, but the US banks have done terrible. I think if you go back on UBS 20 years ago, like back before the financial crisis, I think you'll find I'm going back. I'm not sure. I think I
Hmm.
can go back along. What did it do? A reorg?
Yeah, that's what it did. Don't you love that? Yeah, it
Yeah.
did.
So we don't know where the hell this was. This is reorged back 2015. So it did a reorg. So, but I mean, you can look at the other ones. Like look at Deutsche Bank.
Oh,
All-time
we
high
haven't-
Deutsche Bank back in 2007, $120. It's 11. Let's go. Fun exercise. Barclays, BCS, all-time high back during the financial crisis, $58. I'm ballparking it. It's $7. I mean, this is why the banks everywhere have just been terrible investments. ING back to the financial crisis, 45. It's 14, so it's one of the better ones. It's only down 75% in the last 15 years. What are these some other ones there? Banco Santander, SAN, that was
Oh, I forgot about
22.
that one.
It's $3, so it's down 85% over the last 13 years. Just showing you that it's not just a U.S. bank problem. Obviously, JP
What
Morgan
was
not
that Greek
included.
bank? What's that Greek bank? Or did
I
that
had
get?
that went under. I think was
Yeah,
an
that did.
N something G. I used to check. I can't
Oh,
remember.
remember that? That
National
was
Bank of Greece. I just don't remember the ticker symbol. I'm pretty sure it
NBG.
went bankrupt.
Oh man, that caused some major volatility in the market back when that was going under. We got you talk about a relentless seller and the Dollar General. You got a relentless buyer here in the S&Ps. We are just marching higher, just lifting offers. We're now up 14 handles.
Head of the PC.
Yeah, yeah. Is Mr. Chaikin around?
Yes, he is. Let's get to our guest. You guys smash the like.
I love that Marc has his own intro, has his own coming in here.
Mark, I mean,
Is that the Mission Impossible theme?
yeah, of course. You know it. Mission
on it.
Impossible is this market more like it, Mark. What's
No,
going
Chaikin
on?
come on.
Chaikin Analytics makes the mission possible, though.
Possible.
So that's
Thank
where
you.
we go here. Marc, what's going on, buddy?
Well, we're getting a very nice rally. We're actually overbought in the S&P on a mild basis, and I think it's playing to script. We found support where I hoped we would at 43.50 on the
Perfect
cash
call.
S&P. Thank you. And surprisingly for me, they went above 490, 4,500. And so we're within a hair's breadth of the 4,600 previous peak. And, you know, we're heading into this holiday weekend. One thing I think that your audience should know, because you're reading a lot about it, you know, September is a terrible month for the market. That is true, except when you're up double digits heading into September. And then the odds skew in favor of finishing the month higher. And in fact, what I always look for, and I have for 40 years, is you want to see weakness in early September result in a strong close to the month, and then you typically get a strong close to the year. So I am looking to buy any weakness that we see over the next 5 to 7 trading days in anticipation of a very strong close to the year.
Okay, I'm going to go ahead here, Mark. I wanted to ask you about, of course, we've seen this kind of recent lift in tech, and yesterday it seemed like we were starting to see some of these growth names start to get another move. Are you starting to look at some of these growth names, like we can mention Unity, Shop, or maybe stocks that are under the ARK Invest group? What do you see here with growth names, Mark?
Well, the growth names are absolutely tied at the waist to interest rates. So when the 10-year dropped from 435 down to 411, that creates a bid. But I'm looking at more specialized names. We had a stock that we recommended a couple of months ago, ONTO, and they reported $100 million contract related to AI. And you can see the stock was languishing. We were, you know, basically flat to up a couple of percent. And this is a company with 900 million in sales, and they reported $100 million contract related to AI, and suddenly the stock, you know, skyrocketed. CRM, Salesforce, great report. You know, you've probably been talking about what it's doing pre-market.
Yeah.
228. Okta, big move based on earnings. So it's not just the Magnificent Seven that everybody's talking about. AI is real, and as Mark Twain might have said, the reports of the death of AI are premature. This is real. It's a productivity wave that's going to sweep over the market for the next 10 years, in my view. So interest rates or not, you've got to be looking at some of the smaller names in tech in order to avoid being tied just to those 3 or 4 names like Alphabet and NVIDIA that are, the obvious beneficiaries of this. So that's just one sector that I like. There's a stock that we've been talking about, Pure Storage, PSTG, that makes a really fast flash memory capability that's just announced about 3 weeks ago, a deal with NVIDIA. So there are some specialty names where I think you can make some real money over the longer term. So that's one area that I think you have to focus on weakness. The other area that's doing so well is energy, particularly the equipment stocks like NOV. Even Halliburton and Schlumberger are starting to come to life. So I think this is a sector that's unloved right now. The refiners are just coining money because of what used to be called the crack spread. It's just, they are coining money right now, although the stock prices don't reflect that. So that's area number 2. And then the third area that I think is still going strong are the construction stocks. We just recommended EME, EMCOR, and there's an AI play there that I wasn't keyed into. One of our editors sort of sussed out the story. They're building the factories and the infrastructure for data center growth, and that's a key element of the AI explosion. So EMCOR, Fix, the air conditioning company, FIX, very strong chart. My full disclosure, my wife Sandy has owned that for well over a year.
Nice.
But look where these stocks are. They're making all-time highs.
Yeah.
And so there's a lot to choose from in this market.
It broadened out back in May. We know that did that. It was one trick pony where tech was driving the bus for the first quarter, but then IWM started picking it up and then it broadened out. And obviously we had the pullback. I mean, good call by you on the overall market. We had the pullback that we needed. Maybe we didn't get, the 10% that some people were looking for in the S&P, but I think we got close in the Qs. And obviously on individual stocks, some were down as much as 25%, where Tesla was the case. So, I mean, we had a pretty significant pullback there, and, it stayed down there for a few days, but it's this type of market where there's a lot of money still chasing price, and, they were waiting for a dip and they got the dip. And so you think continued strength into year end here then?
Well, I think there's going to be some sort of pullback here
by the next dip,
early September. So, stay long and buy the next dip. Exactly. But we've got a real tailwind in terms of the typical pre-presidential year cycle, where they almost always close December at the highs of the year. So whether that's 4,800 or even higher remains to be seen. But that was sort of 4,800 to 5,000 has been my year-end target. Once we sort of got to 4,600 earlier than anybody had expected, back in July. But a lot is tied to the bond market. Because interest rate sensitive tech stocks are still key to the underlying market move. But yes, I'm very bullish into year end.
Hey, Marc, could you explain the crack spread? That's not a term we use a lot on this show. A lot of people are like chuckling, but it's actually a lot of the trading that goes on in the petroleum and the energy complex, a lot of it is spreading. And I don't think that people, there's also a lot of speculation, but you have producers, you have end users. There's a lot of spreading goes on. Could you explain the crack spread?
I wish I could, Joel. That's just above my pay grade. I'll study up on it for next time. And
it's just a differential between the price of crude and the petroleum products extracted from it.
Exactly. So right now it's very favorable. There's a chart that one of my people had that I'll forward to you via email. You can put it up on the Pete Carmesino, who does one of our trading services. So it's just a good market, and
Yeah.
it's hard to look at this market and not say, why are there still bears on the sidelines? They're just missing out.
Anything you don't like, Mark?
Well, I still don't like the defensive stocks. So utilities really
Okay.
looking poor in our work.
Yeah.
Consumer staples, menza, real estate sector not really strong yet. So it's the defensive areas where I think you don't need to park money. There's this a choice between 5% and short-term rate instruments or growth stocks. I'm going to take growth stocks, but I don't want to be in the defensive names.
We've been on the line with Marc Chaikin of Chaikin Analytics. He joins the show every 2 weeks to give his fundamental and technical and sentimental outlook on the markets. Marc, it's always a pleasure.
Enjoy
Talk
the
to you
long
again.
weekend,
Yeah,
guys.
yeah. Talk
Oh,
to you
yeah.
again. A couple weeks. We'll be in the football. What's your favorite football team, Marc? I don't think I ever asked you that.
Well, because we lived in Philadelphia for 10 years and we're lucky enough to witness a Super Bowl parade
Wow.
right under our
Fly,
office.
Eagles, fly.
Fly, Eagles, fly. I love Jalen Hurts, and he's got a great receiving core. So we'll see how that
He
stands up.
does.
But, give me some fleet receivers and an arm like that, and I'm going to go there.
Swifty Swift, your new
Yeah.
running back.
Yeah.
I think big things from him this year.
Yeah, they got
All right.
rid of their high-price running back, which is always a gutsy move. But you don't see a lot written about how running backs have a very short shelf life.
Yeah, that's that's the money being spent right now. They clearly see it, Mark. The return on investment not as good as it used to be.
Definitely, but we're excited about the start of football season. That's fall, and it's America, and very excited.
Well, definitely, guys, check out Chaikin Analytics. Thank you, Mark, for joining us.
Yeah, thank you, guys. Always a pleasure.
Thanks, Marc.
All right, let's get back to the markets. How we looking here? And
Creeper
we're getting
rally,
closer
yeah,
to
just-
PCE here.
Yeah, just a creeper rally here. No one wants to be short going into that PCE number. We cleared yesterday's highs. Just been a steady bid here. We do have some daily highs up above that may come into play off this number. But right now, the bulls they've been in control. We talked about it Monday morning. You had that lift on Friday,
Yeah.
and
Well, Tim called it. I mean, we've had fantastic guests this week. Tim Quast came on, obviously, and he talked about the potential for a bottom to be in, which was basically at the bottom. Then we had Ryan Dietrich coming on, and he had all the stats, showing that we've had a pullback. They were expecting a pullback, and they're buying the pullback. And I mean, right on the money there again. Who was yesterday? Somebody was good yesterday too.
Eric Kroll, he did the
Kroll's
yeah.
always good.
Yeah.
Obviously talking about the IPOs and don't invest on day one. We learned that from Eric Kroll and first page of his book. And then obviously Marc Chaikin's had he called the to the number basically on the S&P pullback here. So fantastic guess this week.
I did ask him about that. I go, Marc, are you looking at the cash or the futures, right? Because a lot of the old fogies in the business focus on the cash, which I do pay attention to. But for me, when he gave 43.50 in the futures, and I said, that was exactly the low in the move in the futures. The cash got a little bit below, and I asked him yesterday. I said, Marc, it was a good call no matter what. Were you talking cash or futures? And he said it was the cash. I think the cash got down to 43.33. But if you're a long-term investor trader, I mean, what's 15, 20 handles?
20
right?
seconds to PC. So I'm going to interrupt you here, Joel. I'm actually going to go to the background. Mitch is going to preview this number.
All right, let's get to it. PCE month over month outlook is expected to come in at 0.2, prior being 0.3. The PCE price index year over year is expected to come in at 3.3, the prior being 3. We will see what happens there. Will we get more of a spike there on the PCE year over year outlook? That's what we don't want to see if you're a bull. We'll see what happens here as the number comes in.
They're taking it both ways there. You just take the new high at 39.25. I don't know if it's been disseminated everywhere, but just the bulls, they're just battling it. We started this bracket right here at 45.38. We've taken 45.40. Really a pretty tight market. I guess the people with the separate, with the quick feeds know what it is. We're also getting initial jobless claims here. Looks like we do have a little bit of sellers trying to come into the market. So far, 45.40. It's your pre-market high. Kind of a tight market here, Mitch. What are the actual numbers?
Core PCE price index year over year coming in at 4.2 versus 4.2 estimate, prior being 4.1. So that actually is going up. Not a good sign there for core PCE. PCE price index month over month is at 0.2 versus 0.2 estimate. So it just came right in line. The year over year number also coming in line at 3.3 versus 3.3 estimate, prior being 3.0. But what does this also show, guys? If you look at the priors and you look at what came in, you actually see an increase here in inflation. And that's, I think, what the Fed has been pointing to, and why Jerome says that they're just going to continue battling inflation.
I mean, we're coming off some very hard comparisons, right? Going back a year ago, and now you're looking at it. But you know what? They're not disastrous numbers. They're right now the street is just digesting it. It has a bid. Following the trend here, the Bears tried to make one little attempt here. It looks like to push it down towards the area of yesterday's high, but pretty much in line, not super high expectations. So for now, looks like the Bulls are still in control as we speak. 45.40 is just shy of the next level that you should be keeping an eye on. Bonds are hanging in here. They're up a half a point. I mean, they're okay. They're not disastrous. And then when you have a trend in the
Inline
market,
numbers good enough to continue the party. And that's what the bottom line here is. The Bulls were in control coming into this number. I mean, for crying out loud, we're up 18 handles ahead of it. So the Bulls were in complete control. These numbers are not bad enough to derail that. So that's the issue that the Bears have here right now. The numbers weren't bad enough to derail it. I agree with Mitch. I don't like the trend overall here, that we are starting to trend higher overall. Obviously, we knew gas prices had went up substantially, so there was going to be some stuff in there that we kind of knew was going to pop it up, and that's why the expectations. But it's an inline number, and I don't think this number is bad enough to really pull the rug out from the bull thesis here.
Yeah, we'll just have to wait. We'll have to wait for the CPI and the PPI, which don't come until the 13th and 14th. But once again, the after hours and the pre-market bidders have it right so far.
Yeah, I think what I'm more concerned about is, will we have a 4-day win streak? And I don't know if we could have another one today. That 450s, if we come back through it, we'll see.
We had a 4-day win streak yesterday. We're working on a 5-day win streak.
Oh, the 5. But in any regard, it's to Mitch's point and to Mark's point, we are overbought. We went from oversold to overbought very quickly. So I'm not chasing stocks here. I'm not coming in and saying, yep, I got to get in here. I think, we even had a Kramer tweet yesterday, basically, we're parading around. We know he's had a surgery or something, and he's off this week. But he tweeted out about Apple saying, if you didn't buy Apple now, you're basically never going to get another chance. And we know that's just simply not the case. Like, just basically telling everybody and his followers to chase after the stock just went up basically 7% in a week. So, I mean, when he starts getting bullish, we know we start to get a little bit more concerned. I think, I think I'm a buyer of dips like Marc. Like listen to somebody like Marc Chaikin over Jim Cramer, where you're sitting back. Now you've identified trend, waiting for dips to buy, as opposed to just chasing stocks, buying the stock that's up the most and selling the stock. That worked good, back in 2020, buying the stock that's up the most and selling the stock. But we've kind of, even in this bull market, yeah, the first half was really good, but we've had a lot of contrarian, moves here in this market as well, especially if you get away from tech. So I still don't think we're in the market that we need to chase, but I think you got to have your list. And I think, again, it'd been nice to execute and buy a lot of stuff 4 days ago. I think you're going to get another chance.
Let's go back to the earnings stocks. Let's stop talking about the macro. Let's get more into these earnings. Let's go to Okta. You heard You heard Marc Chaikin mention it. Let's go to it now. Okta shining in Q2, delivering adjusted EPS of 31 cents, surpassing the estimate of 22 cents. Sales of 556 million also exceeded expectation. Looking forward, Okta projects Q3 total revenues of 558 million to 560 million, and also boost their full year 24 total revenue outlook.
Big pop, good move, up at 90, all kinds of resistance. You're a long ways from there, though. Do you fill the earnings gap down
I
from
don't
last
know. Look
quarter?
at that.
That's 88. You know, you're getting 2/3 of it back here. Whenever you're in a gap area, you always got to be careful of the full gap fill. So I would say you got up to 88.90. I would be a seller up there. Do you have another $5 or $6 to tack on here today?
Oh, man.
I don't know if I'm chasing it. You know, if I was in it, would I be holding out for it? Maybe. I'd be looking for, you know, like if you got up near that gap fill area, though, at 88, I'd be a seller.
Yeah, 88, 85 is the gap fill. We're still trading at the highs of the pre-market session, 82.76. I think anticipation of getting to that number. I mean, if you really have a big long position, I don't know. That's just such a big gap to fill. Maybe for the best thing for this today is, maybe not fill it today, gap up, make a low at, 79 or 80 or whatever, and then build a little bit of a base. And then you wake up, you work your way up to it. But, get your offers. I'd be out there at 88, 84. I have 88, 85 as the low. But heavy lifting here in Okta, but still seems to be well bid, trading at the highs of the pre-market session.
What's going on in Chewy? It doesn't look good here. Let's talk about it. Chewy going down, down, down lately, especially that daily top right will show you all the trend that you need to see. Chewy delivering a solid Q2 performance, reporting an EPS of 15 cents, surpassing the loss of 5 cents. Sales of 2.78 billion also beat the predictions. The CEO highlighted strong growth and profitability, yet he can't turn it around.
Online dog food store. I mean, there's better.
That's not what it is, Dennis. That's not just what it is.
What is it?
It's an everything pet store, and it has also medicine, prescription medicines that get delivered to your house. It's not just a dog food store.
Online pet store.
There you go. Make it a little bit sound a little better.
Pet store. I correct myself here, but I clearly remember pets.com in the year 2000, and I clearly remember it going to zero. So I'm not saying Chewy's going to zero, but there's so many better things to invest in. It's got support down here. We'll give you that. Could it bounce? Yeah, they're in the market that they're trying to buy dips. So I think you got good support down 22, 23 area. But there's just a lot of better areas to invest in. This stock has been a disaster since 2020. Obviously, had the big COVID run when they bought everything. When obviously Portnoy was throwing darts at a dartboard and just putting 3 tickers together and making money. That's when you knew the times were really good. $120 the all-time high, $25. I'm going on a limb saying it's never going to see $120 again. I'm just not interested in Chewy.
Is it the guy that did those amazing Bed Bath and Beyond trades? Isn't he the one that's
yeah, that's a good mention, Joel. That's where I was going to go to also.
Yeah.
I think what if they're fading Chewy with number one, our friend, right? Ryan Cohen.
There you go.
I got you, Joel.
Yeah.
And I'm wondering if some people are maybe just fading him, and that's why Chewy's just been getting destroyed.
I just don't think there's I just don't think there's like a story here, like what's the AI story in Chewy? Okay, let's stop. What's the AI story in Chewy?
Automatic delivering, like let's say like they
drones dropping off your pets' foods.
Yeah, okay, like telling you when you need
can reach to maybe find it. But I just think think about let's just give you a perspective here. Think about how good of a year it has been for stocks in 2023. 2022 sucked for Chewy as well. 2023, we've seen a rebound in so many names. This stock started the year up at $35 a share. If I'm looking at the chart right, it might have even been higher than that. I'm looking where we started. Call it 37. $37. It's 25. You got to really stretch to find stocks that are down 30% this year. And that's telling me that this story was overvalued, hyped up, Ryan Cohen, GameStop, whatever it is. The story was just too hyped up. One trick pony because it's an online pet store. No, thank you. It's performance speaks for itself.
I have two things to add here. One, Dennis, gave you that monthly support here at under $23, but you are coming into the low of the move. And,
Yep.
If your target down here was 25.29, right, you might get a shot at it. Pre-market low is right at that area, 25.50. But you know what? I'm gonna change this company. I have the AI story for this company.
What is it?
I'm gonna change the name of the company. And I don't know if anybody's gonna get this. I'm gonna change the name of the company to Astro. Does anybody know who
You're
Astro
talking
is?
from the Jetsons?
Yeah. AI dog.
Oh gosh, Joel, this joke was bad. We're giving you
Robot
crickets
dogs.
on this one.
I'll tell you one thing. You might not have
Too
to
much
pick up the
build up.
waste. You might not have to pick up much waste at least. That's the bonus at least. All
Oh,
right.
look at at least the chat is a
The
lot.
chat liked it. The
Yeah,
chat liked
chat's-
it.
Yeah, look at
Love
that.
it,
You guys-
Dana. Jeez. Okay, they're
Yeah,
giving me
Milky
heat. They
Fate,
liked your
yeah.
joke. The chat liked it.
I guess you guys are aging yourself out there, guys.
I like it. I like the Jetsons.
No. That's way too. That's even past my time. So
Yeah.
that's all you guys
It was
right
a
there
good
with the
show.
Jetsons.
It was so
Yeah.
far ahead of everything else.
It was
That
good.
is
Dad
true.
jokes 101.
I'll take the Rosie over the dog, though. I'll take the Rosie. Just clean my house, do my dishes, clean my
Well,
clothes.
Musk is supposed to be giving us that. So if
That's
Musk would
what we
hurry up
need.
and give us that, we'd be all set.
All right, let's move to notable ratings here. Palantir Technology, Morgan Stanley downgrading Palantir to underweight despite raising price target to $9. I was actually long this yesterday. Got stopped out with bad execution. Had it in the 1550.
Wow, that was a good buy.
It was a nice buy, but I got to say I didn't play it right, Dennis. I set a stop and I stopped watching it because I wanted to go trade some other positions, and they just came and they just stopped hunting me.
There's an AI story here. The AI story is starting to get hot again. Whether it stays hot, I don't know. You get huge support at 14. I don't know if it gets all the way back down here, but I do think Morgan Stanley's downgrade is bad timed here.
I do too.
It was breaking out yesterday. They're trying to stop it in its tracks, and it's trying, but it was down here more. I think they're going to buy this dip.
I think so too. I mean, this stock had a tremendous run, right? $9. It got to 20. Now, I know I mentioned this before. These 2 days here where it kissed 20 and then went over 20. You had some analysts just greasing the pump on CNBC saying, you got to own this stock right now. This is the best stock ever. And you got the rug pull. I'm going to agree with Dennis here on this one. So you had your move up from 13.68, just over $16. It's $2 move here. If this came down in the lower 15 handle, I think people are going to be licking their chops, just thinking, "Man, I might not get this back in the 14 handle." So I'm going to fade. And this is Morgan. This is coming from Morgan Stanley. So if this, I think
it's bad timed.
Morgan Stanley, the Mike Wilson top, right? And then what was another one of their calls that was?
They keep trying to stop this market from rallying.
Yeah, you can't stop this market. Anyways,
evil Morgan Stanley, evil,
yeah,
bearish,
evil.
always bearish, evil
Suits.
Very evil.
Hey, S&Ps are leaking here, Dennis. I don't know if you're getting hit to some bids. You had the buyers into the print here. And now, and what I like with these kind of setups is when you pull back enough from the pre-market high, it's a good number because you're $10 off it. So if they want to juice this thing, try and get it to 45.50, they're going to have to do some heavy lifting here. Even to not heavy lifting, it's 9-10 handles, but get over that pre-market high, 41.25. That was just under your August 10th high.
Okay, we're getting some questions about some stocks. We'll save some time for some ticker time. We only got a couple of more topics to
Sure.
go through. So, team, get ready. We'll do some ticker time for you guys. Let's go to CrowdStrike. CrowdStrike reports a strong Q2 EPS of 74 cents, outperforming the expected 56 cents. Sales of 731.63 million also beat estimates. The company projects growth in Q3 EPS and full year 24 EPS, along with increased revenue expectations. Of course, we got good earnings reports from PanW. I started seeing that lift a little bit yesterday. I was already taking a look into CrowdStrike. What do you guys think about it today?
I think CrowdStrike was all over the place on this report. It was down and then it was up, and it just didn't know where they wanted to take it. And that's kind of what I think about the stock chart here too. It's just kind of all over the place. 140 has been huge support. We got down there 2 days ago and we bounced off it once again here. Really, even since the last quarter, it's kind of lost its way. At least the stock has kind of lost its way here. I do think eventually it resolves itself to the upside because cybersecurity stocks, I just think you're going to need them as more and more, especially when you get to artificial intelligence and you look at the hack ETF, it's near the highs. I mean, I think there's just, people and obviously a lot of fund managers that are just have underneath demand here. But, with that being said, this CRWD, the last 2 quarters in a row that weren't that great.
If there's anything that if you guys have gals have been listening to me over the years with technical analysis and the pre-market trading, I mean, this should not have traded over 155. I mean, that's just when I look at 5 highs in the same area in a beaten down stock. It's daily, monthly, and daily, weekly, and monthly resistance. I mean, it went to 156 and change. I mean, went to 157, but just all those buyers there. Maybe if you don't put your
Yeah.
offer there on the way up, surely if it loses momentum, and I know, Dennis, it probably went up so fast and down so fast unless you had your order out there. But man, you just have to respect the level that's traded 5 times in the month of August. I mean, now where to buy this thing, I have no idea. The top of yesterday's range, you might get a look at this. The top of yesterday's range was 150.17. And yesterday's close was 149.18. But if you get another look at 155 again, I'd be out there.
Canaccord Genuity upgrades Shopify to buy and raises price target to 70. What do you guys think about that? And then there's also some Amazon news here. Dennis, you caught that Amazon. What did you see here from Amazon?
Last night. And obviously, if you're using your Pro, remember, always keep your press releases on there too. And there was a press release there last night with Shopify and doing a deal here with Amazon. I'm just trying to grab the headline here. I saw it last night. I'm just trying to grab it now. It came out. Amazon launches buy with Prime app integration for Shopify. So that came out at, I believe, 6:12 last night. And the stock popped $2 immediately on it. Like, I mean, in a split second. That's your algos reading those headlines. And then, we pulled back a little bit. Well, now you get that subsequent upgrade here today. So Shopify is off to the races here. Which this was on my shopping list. I think it was on yours too, Mitch. We were both saying, do we get it at 50? We were hoping for
I have
the
a good
40s.
question. Was this going to be an opportunity, like getting like a company like Amazon just in an early time, like going for Shop, and then we eventually look back at Shop at being real competition for Amazon? I mean,
well, Shopify is I'm thinking about. Shopify is competition for Amazon, first of all. So it's a good point you're making. Amazon's just such a mammoth, though, that's not like they're just trying to squash their competitors. So they're actually working with Shopify here too. So trying to work with them, keep your friends closer, keep your friends close, keep your enemies even closer, maybe type of deal here with Shopify, Amazon, helping them out, throwing them a bone. But I mean, whenever you mention Amazon with anything, it's going to get a lift, especially with Shopify here. But, what a move here. And we're talking in 10 days from 51 to 65. So now it's hard to chase it. So I wish, and I had it on my list. I had Shopify written on my paper. I was hoping it could get down near 50, maybe even to the 40s. And I actually was going to buy some, and now it's gone again. So I guess sometimes you just got to not just hold up for the best price. You just got to strike when you get a good enough price.
The dailies, I don't have a good number for you, but sometimes when you get moves like that, the double dose of good news, two highs within like a buck of each other, because you had a high at 425 and 66.19 to stop right there in the 65 handle. So getting right back into this resistance right here. So we'll keep an eye on it. But big move, double dose of good news for Shopify. And you always want to be mentioned with Amazon.
Yes.
Yeah, Amazon. Pre-market prep brought to you by Amazon.
All right, it's time for some ticker time, guys. We saved a little bit of time for you guys. Definitely throw up some tickers, and Joel and Dennis, if you guys have anything you've been going after lately, you guys can mention it now, or anything you're looking for. I'll say at least I took a shot on something that I brought up here yesterday. I went with Apple yesterday, so I have a decent position in Apple. We'll keep looking to see if that can keep pushing. I got 185.98 yesterday. Almost about up about 1% on this one.
Tell us why, because you're chasing it here. I'm just curious why.
It's just the iPhone event. I'm just looking for a run into the iPhone event.
When is
I've been talking about it's on the 12th. The 12th of September. So I think in the first week of September, I'm looking for that nice run. And then eventually, as it comes closer towards it, I want to sell it as everybody starts looking for it for that iPhone run. But I'm trying to play it. I'm trying to front run it.
I'm scared you're early. And again, in event timing, and obviously just my opinion, I'm scared you're a little bit early. I usually do the events 3 to 4 days ahead. 12 days ahead is a long ways, lots of market risk, obviously. But it all depends on the market. This is the market stock. If the market continues its party, and maybe Apple has new all-time highs on its mind here too. I mean, the momentum is clearly with you here, Mitch. It's trying to do a gap fill here too, up to like 190, which it may do. I don't know if it's going to do it today, but it may do it sooner than later. So I think short-term momentum is definitely with you here. I'm just scared you're a little bit early on the event-driven catalyst. I love, trading ahead of the catalyst. I like trading ahead of earnings reports. I like trading ahead of events. I like trading ahead of, whatever I can find. Even in dividends, we talk about that, strategy being long AT&T and Verizon ahead of their ex-dividend dates because the dividends are so high. So I think there's definitely a strategy always trading ahead of the catalyst. Just scared you a little bit early. I'm going to write that down, though. I'll be interested when we get probably mid to the end of next week. I'll be interested in this strategy for sure.
Right, and that is also right around the time of the CPI and the PPI coming out. So good luck at that between then. First things first, the relative strength here in Apple compared to the S&Ps is not very good. The S&Ps, that Spider's trading up 0.26%, while Apple's only trading up just 0.06%. So not participating. Also, the S&Ps took out the previous day's high by a wide margin. Apple didn't. So I know you're holding this for 2 weeks, but I would just make sure that you bust through yesterday's high, 187.79. You get a firm bid in the 188 handle. And then regardless of the timing on it, the gap fill was at 190.69 from earnings. That's still $3-4 away here for Apple.
There's some interesting ones we could bring up with this one. I think we could just do two with this one. Let's do PayPal and Square as that opportunity. I know I was looking at it yesterday a little bit. We could see, some buying action coming into these growth names. What do you guys think about these two?
We've been joking about the PayPal versus Square race just on the prices. PayPal has bounced a lot more than Square has here. Square can't seem to get off the 55. I talked about this 55 as support, and wow, has it ever been support? I mean, this thing in the last 7-8 days, multiple lows in the 55. So it's clearly Square support is very, very well defined. So you know where your out is. This thing starts ticking 54. And you got to bail if you're long it. But I mean, wow, what a support level. PayPal bounced earlier. I do pair trade these two stocks. They do still pair trade fairly well together. I think if you're long PayPal, I think it's had a pretty good bouncer already. I think you're thinking about 65 as your out. So you may have another $1.50 here, but it's been a pretty good bounce. It is concerning that Square hasn't bounced at all, though.
Yeah, the PayPal, it's trading up 4 cents, so a little bit of sympathy here. I'd like to see it's just under 65 today if you're looking for a target on that one. The Square has a little bit more interesting setup here if you like to buy into strength here, multiple highs at $58, trading up 14 cents. So these would be one of the charts where very early on, you open up, you hold the close, you hold 58. And then minor breakout here, maybe get it rode up to 60. But if I'm buying it at 57.80, 57.90, or 58 even, I'm not even waiting to yesterday's low to figure out I'm wrong. This would be one that, hey, it's busting out. Some people are going to have to buy on strength. So that's what I'm looking at in SQ.
Let's go to the next stock here. I see a bunch of names, so keep dropping up those names in the chat. Here's an interesting one: Visa and MasterCard.
Oh, unbelievable. I mean, I sold my MasterCard last year at 350 because I just had it in my portfolio for 15 years and I just fell at 28, 29 times earnings. It was just overextended. I also thought, that we could go into a bear market or continued, and this one really hadn't went down. It did go down actually after I sold it because it was actually not even 2023. I think it was in 2022 I sold this. So it actually did go down. I just never rebought it. And I guess that's the problem. When you sell stuff out of your portfolio, you got to keep it on your list
Happens to the
get
best.
back in. And I often get out, I often exit very well, and I just don't get back in. Is the problem in the long-term portfolio. I didn't get back in. I don't get it at 32. I think it's over 30 times earnings here now. I don't totally get it. I feel like there's going to be competition coming for it as well. So a MasterCard and Visa, I can't argue with the performance. Shows the consumer still very strong here too. Visa close to all-time highs, and MasterCard is making new all-time highs. Unbelievable stocks.
Yeah, and I'll just look real short term here, and it kind of had a weak close and kind of a strong market yesterday, and you're getting a pop up on 2,000 shares. You're up 259, so that's a little bit rich for my taste. Just check out your after hour. Man, that was what was yesterday's high? I'm sorry, I'm off on the daily on this one. Yesterday's high 417.78. That'd be one heck of a target. It's the only number I can give you in that. And then Visa. Same thing. Use yesterday high as a target. Concentrate on the old time closing high that was made yesterday, 246.23.
All right, let's go to an interesting one here and seeing some Chinese names being mentioned. We've been keeping a close eye on them. They've started to move. Baidu is the one that Marshall wants to take a look at. I was keeping an eye on them yesterday. They seemed like they were starting to get a little bit of strength. I just find it so hard to play these, but PDD, Baidu, Baba, all in the same boat, right?
Yeah, and that boat is pulling back here again. I mean, if we're going into this full-on ramp-up bull market here, you're probably buying China on the pullbacks as trades. Again, we always know that there's the risk of a Taiwan thing happening at any time.
Yep.
So you have to have that, stomach for the overnight risk. But Baidu, Baba, I think, they've come back a lot. We talked about PDD Goldman upgrades yesterday too, and the thing really blasts off.
Kept on
another
going.
dip here today. I think actually I like Baba. Again, technically, I've kind of liked it here. And even in the 80s is where I kind of wanted it. I think you get back near 90. I think you might be buying Baba.
Okay, but I think our person asked about Baidu, right, Mitch?
Yeah,
Or was
Baidu,
it Bob?
Baidu.
Baidu.
Same
Okay.
thing.
Same thing. Yeah.
Well,
They
this
move
is
together. I pair
one-
trade those two stocks. Those two, you buy Baidu, you own Baba.
Thank you, Dennis. You know how it goes, man. Those
Okay.
relationships.
Yeah.
Man, that's a big old run from like a week and a half ago, 125 almost to 150. I just would keep an eye on that close. If I was long this thing, I'd be like, please get back. If I had a short-term trade on, I'd like, please get back to unchanged on the session. That would be good enough for me. That's been a big run. Coming back on the downside. If you just want to exit on weakness, yesterday's low is 139.14.
I don't know if it's
I missed too. I just want to take over on DKNG because I saw the chat mention it. I put an order out there when it was coming in at 25.11 in my long-term account.
And
I had this order out there when the stock was like $27 and coming down. And it came down and got to 25.41. And I was like, I kept hoping, like I thought it was going to tick that 25.
Yeah.
And I was like, I was a little bit above it. I thought I was going to get it and I wanted to be on DKNG. And now I look and I was like, I missed it by 30 cents. And here it is up $5. And I'm like, oh, I guess sometimes you just got to just pay up.
Well, Dennis, you know what I did? I said, you know what? I missed DKNG. I have to go for Penn. So I have Penn. I got it again.
Penn.
I got it yesterday. I have 24.11. So I'm even in the red right now.
It looks okay. I don't mind the Penn chart here. I'm long.
I have
my
to take
wife
a
is
shot.
long in her long-term
NFL trade, baby.
Yeah,
NFL
I don't
trade.
mind
So
the
this
Penn chart
weekend,
here.
this weekend's a lot of when you're going to see the fantasy drafts go through. And so fantasy drafts also creates momentum and hype from all the football traders. And then they're going to start thinking about NFL season coming. The bets should start coming in next week already.
I
So
think
I'll
it's
be
more
looking
the
for it.
bats. I think it's more the bats because I've been hearing a lot like fantasy is so complicated. You got to do, I mean, you got to do your homework on fantasy. People
Yeah.
are just like, hey, there's a game spread 6.5. I'll do this. I'll do a teaser. I'll do a parlay. I mean, if there was a way to short fantasy sports, I would do it because I think people are just, and now you could bet, in game, half game, field goals, flip a coin. People don't want to do their homework. They don't want to do. I mean, fantasy is tough. It is really tough to do. So, I mean, it's still good for the football season starting. But man, I think people like the games.
All right, let's go to, I don't know if it's my rear end asking or just someone named rear end in the chat. Gluteus Maximus looking for coin.
Nice.
Wants to take a look at coin. I'll tell you guys, I took a shot in this one just based off of what's been going on in Grayscale. What do you guys think about this whole situation?
I think you're buying Bitcoin here. It pulled back. I think.
There you go, Dennis. Dennis, are you buying Bitcoin?
I own a little bit of it. I'm
Okay.
thinking about adding to it, to be honest with you.
That's interesting.
It was a big move yesterday. Like, look at BITO if you just want, like 1451. We just pulled back here. I think this ETF is going to get approved. I think it is going to be the next catalyst to take us forward here. I think you have great support underneath here. I don't know if Coinbase is my vehicle of choice because that thing's just too much to stomach sometimes. But a BITO, which you're just basically buying Bitcoin here. That's the strategy ETF. I mean, I don't know. Maybe it's don't want to own that because you get the official ETF approved. Maybe that's not the one to own. But I think overall, just owning Bitcoin, I think Bitcoin's a buy here.
Just specifically to the coin. I mean, you're right here, right now. You got two highs at the same area, right? Make key on 86.40 today. If you're looking for more upside, those are the highs in the last two sessions.
We'll see what happens. If you guys didn't catch the Kathy Wood interview yesterday, make sure you guys check that out. I can give you guys the link. Dennis, what's your wrap up for the market?
I think you're still looking at dips here. It's been this market where the trends persist for like a week or two, and then it turns, and then when it turns viciously. And we had the bears in total control for a few weeks, and then the last week of August here, the bulls just took it right back here. So I think you got your shopping list. I think you're buying dips. To Mark's point, I think I want more than like a 10-point dip around the S&P here, though, because we've ran quite a ways here now. I mean, if you could get Microsoft back, well, Microsoft really hasn't gone yet. That's interesting. Actually, I was looking at Apple and I was thinking Microsoft gone more. Microsoft really hasn't even gone yet. So that one's interesting. But I think you're buying dips. That's why I was like, even like the Palantir here today on the Morgan Stanley dip. I think I'm looking at buying dips in this market.
Like to see some follow through here. Now there were 10 handles off the pre-market high. I think really the bulls, I was turned a little bit bullish on Monday morning, and now we've had a really nice rally. I see a daily high up in that area too. So if the bulls are going to make this a strong winning fifth day, I think you got to clear that pre-market high early and often. That's 41.25. Tomorrow, just to finish up this week of fantastic commentary, dug up Craig Johnson from Piper Sandler.
Oh, wow,
and
what a
yeah,
week of guests.
yeah, like it's kind of like I reach out to these people and I'm like, oh, it's Labor Day, 4-day weekend, but Craig's going to be at his desk and he'll be joining us tomorrow morning, 8:35. I know he's a crowd favorite.
Huge.
All right, guys, stick around. Of course, we got live trading coming up next. Hit the like button. Let's go.